The Nikkei is making waves. Palantir is at a turning point, and China's tech sector is flashing key signals. Are we looking at breakouts or breakdowns? Let's dive into the charts and uncover what's next right now. Palantir. Early in February, we shared this particular chart, on February 8th to be exact. When everyone was expecting Palantir to go to 200, 300, 500, and even 1,000, we said, nope, Palantir is overbought, and too many signals are flashing a potential reversal of a trend. And this is what happens right now. So let's have a look. First of all, Palantir is forming very bearish candles. On the daily frame, on the Wednesday, it was a huge bearish engulfing and then attempt to form a bottom and another bearish engulfing on Friday. So technically, it helped Palantir to form this huge bearish engulfing candle on the weekly frame with very supporting technicals. And now we are looking for a decline. So the next week is almost guaranteed to be red. And this week would be important because this is a monthly closure, and we know what it means from candles perspective. So we have a candle, monthly candle to be closing. If we look at the monthly frame right now, we have 1, 2, 3, 4, 5, 6, 7, 8, 9 green candles in a row. From the candlestick theory perspective, it's an overstretch, and a pullback is due. The question is how quickly and how far it would go. And if you don't think that this is the RSI. Monthly RSI right now is sitting over 90. Well, that would definitely help with reversal here. So where the Palantir would go, let's have a look at Elliott waves and try to understand. So first of all, we would need to adjust the channel just a little bit. So this is wave 1, this is wave 3. And now we would be looking for a slightly updated channel. So this is wave 2, and potentially we would be looking for wave 4 somewhere here. Let's measure potential, make some adjustments here. So from 97, this would be the most typical. Okay, so it's already at 97. And the next way, the bottom, I would be looking possibly here. So often wave 4 finds support at the level of wave 4 of a smaller degree. This is exactly what we pointed. This one, that one, and I would say that as wave 2 was very flat and horizontal, wave 4 could be much sharper. In our case, we would be looking for something like this. As wave 4, it's probably gonna be a complex one. I would be looking for a shape like a zigzag or a flat potentially. So it could be a flat, something like this. But let's keep it the original one, and our target area is this one. So 97 to 64. Yes, so that's the perspective for Palantir, and we will be watching it. We'll have a look how it develops right now. So far, the wave is too young, and we need to have more data in order to forecast it. Now let's have a look at Nikkei, what the Japanese index is telling us. Last time we looked at it in August 17, 2024, and what drew our attention is an impulse down. We said that possibly we had a chance to look for a corrective wave here and the potential to move down for another wave, for wave B or for wave C. And in our case, this was a very interesting development. So technically, Nikkei failed to form an impulse upward. And now let's do some clean up here. So this was A, B, and A, B, C, and this was potentially wave A of a bigger correction. So let's make this change. So this was wave A. And then this was potentially wave B. And the most interesting is the current wave. So I would say that this is probably an ending diagonal. And if we make a couple of lines here, place them right here, we would see a possibly ending diagonal, or this is actually a rectangular shape, almost rectangular shape. So in our case, this is a possibility that ending diagonal is completed here, and this was wave, potentially wave B, and we would be looking for wave C somewhere here. So let's do some measurements. First of all, if this is a diagonal, then it needs to return to this level. This level this is the first target for a diagonal, and let's put the price label here. So this is the first price. The second one, we will be watching for a bigger frame. So this is wave A, and if the wave B completed here, then we would be looking for a wave of a similar size. So in our case, this would be the potential. So let me open a few more. Okay, so let's extend length, right? Was this one, and oh, I need to reverse it. Let me reverse. Yes, this one, and we would be looking for this particular targets. So somewhere from here, and this is the minimum. This is the minimum what we would be looking for wave C, and just to make it better visuals here. So this would be our perspective. So let's remove unnecessary elements here. So wave 2, wave 3, potentially it can go down like this, but it is early to discuss it at this moment. And what we are looking for is, this is the current level that we would be looking for, at least 18% to 25% decline for the index. And if we look, for example, at some candles, we can see that the daily formed 3 black crowns, and the weekly completed with a strong bearish engulfing here. And if we look at the monthly, potentially for the monthly frame, we can see if it moves a little lower here, it will confirm this big bearish harami and open a path towards lower lows. And that would be our targets, and I would like to put few more. This would be our targeted area for the next move. So far, the wave looks motive, looks impulsive. So this is potentially the leading diagonal first, and then so far this is a very strong impulse. Let's see how it develops. This is the perspective for now. And now, after Nikkei, let's move to China's Technology ETF. That's a very interesting one, and one of our subscribers asked for a review. It wasn't an easy one, I can tell right now, but there are a couple of interesting moments here. First of all, I would like to point that the wave from this nominal bottom in October 2011 has been a diagonal. We have a huge overlap of major waves here, and I'm talking about this one. So we have 2 waves overlapping, And in this case, we just cannot have an impulsive wave. So assuming this is wave 1, wave 2, wave 3, and this would be wave 4, and this is wave 5 of a bigger wave 1. And just to make it complete, we'll place a couple of lines just to make sure that this was indeed a diagonal. So a leading diagonal, and obviously after such wave we are seeing a very strong decline back, and the wave down was impulsive. This is how we break it: wave 1, 2, 3, 4, and 5. This is the first impulse down. And what is happening right now? Let's place some numbers here. So this is potentially wave 1, and this was wave A. So the impulses down are never single ones, and this wave, another wave that is right now developing, is possibly wave B of a bigger correction, and this would be A, B, C, something like this. First of all, I would like to emphasize that when we see a diagonal, prices are always tending to return to the level of origin. In our case, this is 18. Okay, so let's make some targets. So it's 18 for this level. So this is wave C, potentially wave C. So if we have an impulse down, then we're going to have wave B and wave C. So what we are seeing here, first of all, let's zoom in a little bit. This is the current wave from this potential bottom. I would say that this was what we were seeing. This was potentially wave A. This is wave B. And now we are looking at wave C of B. In our case, this is not an impulse. So first of all, the first wave of the bottom is clearly corrective. It's an ABC. Second, even if we consider this as an impulsive wave, well, with certain stretches, this wave 2, wave 3, and wave 4. This wave 4 overlaps with this possible wave 1 and making it impossible for an impulse. So in our case, we are looking at another potential diagonal. So something like this. It could be, by the way, this one, and that's a possibility for another wave C. So wave C could have ended here, but we don't know this yet. And this would be another wave that is developing down, wave C, in the form of a diagonal or an impulse. At this point, it is not very clear. It could be the beginning of an impulse, or it could be the beginning of a larger diagonal here. So far, we are looking down, and if we look at some candles here, so what we are seeing, this is the monthly frame. I would say this is a freshly made 50 by 100 months moving average bearish cross, and it looks like ETF got rejection here at the 100 months couple of times. This is the second one. The month is still ongoing, and we will know about this in 5 days. If we switch to a different frame, we are seeing possibly a bearish flag, which has a chance to move down. So far, the Friday's candle was daily one, was very concerning, and we see here like 5 bearish candles in a row. This is a highly unusual development for an impulsive wave, for a healthy trend. And considering some technicals like overbought or RSI and other indicators, this is potentially a top. If we see a very strong move on Monday, Tuesday, and we will see some strong bearish candles, we could consider this as a reversal. And in our case, if it indeed happened, then we would be looking for this particular move. And wave C would be somewhere here. So potentially, and again, from the long-term perspective, we would be looking for a return towards the level of origin, which is 1825. It's difficult right now to digest it. It's difficult right now to understand, and we will be looking for level by level once things developed, especially if we have candles. And the next one to watch would be the monthly one on February 28th. If it happens, if the monthly frame closes with a bearish candle, we would be looking for a significant move down. And from the current level, we would be looking for something like 45 or even 60% decline potentially. Well, this is obviously the worst case scenario, but it is what it is. So far, we are seeing clearly that the China's Technology ETF failed to form a clear impulse of the bottom, and most likely it is going to return to the level of origin. So at least to this one, at least. That's my ballpark estimate. So at least to this one. But it could be deeper. So for 27, it would be like 43-45% decline from the current level. All right, so that's all I wanted to discuss today in our Stocks in Motion series. If you like this educational series, please say so, share the word around, support us with your subscription, and follow us on multiple platforms like Twitter, Telegram, Reddit, and also check our website investingangles.com, where we post lots of technical information. And right now over the weekend we are posting weekly reports. Thank you very much for watching, and happy trading, everyone.